Alright guys, today we're going to take a look at how to account for taxes. So we know that we have to make quarterly payments and we've got to send those checks out, and we have to predict that income from a forecasted income statement. But now we're going to look at, okay, once that's done and we're sending out checks, how do we account for it in our workbooks? So let's get started. Okay, so we're going to look at an example together, and then of course you'll have some independent practice. You'll notice there are 4 tabs at the bottom. One says group work, that's where we are right now. Group forecast statement, we'll be using that sheet as well to help us here. And then there's the independent practice, which is very empty, of course, for you. And then the forecast statement, which is filled out. So I have taken care of the forecasted income statement, and you'll be able to use this, and I'll show you how to use it as we do this example. Okay, so pretty much we have to figure out what checks are we going to be sending the IRS for the quarter payments. And so we talked about this before. We can figure out, we can forecast certain things in a forecasted income statement. And one of the things I want to look at is right here, the taxes. Okay, so our expected, now of course we wouldn't know right now what the end of 2020 would actually look like. We'll talk about this column in a second, but right now we have an expected income we planned for taxes to be about $7,596. That's our plan. Okay, it could be higher, it could be lower, but this is our plan. So we're going to take this value and figure out what our payments need to be. And then once we figure that out, then we can start sending those payments out. So let's just go back and start by accounting for this. So first thing we need to figure out is, okay, where does that original $7,596 go? Well, it's definitely a liability. We owe it to the IRS. And so we're going to put that as a credit and increase in liabilities. So we're going to put $7,596. All right. Now we have not paid for it yet, so it can't come out of assets. So that's why we need what's called a contra account. It's an expense account to help keep things balanced. At the end of the year, we take expenses and we get rid of those accounts. We're not going to talk about that today, but for now, we know this is an expense that helps balance my debit and credits. Okay. So let's go over here and let's make room for this. So this would happen, let's say January 1st. This is what our plan is. And so we have now incurred a liability to the IRS that was a credit, and we have an expense. So let's start with the debit. Federal corporate income tax expense. And that was a debit of $7,596. And then we also, space 1, 2, 3, 4, have federal corporate income tax payable account, which means we owe them a credit of $7,596, keeping things balanced. And we have to write this down in some kind of notes or memorandum. Okay, so now we just need some kind of memo for this. So we're going to use the forecasted income statement as proof. So this would be the 2020 forecasted income statement. And there'd probably be an official memorandum, some kind of number, but for now that's what we're going to put. Okay. All right, so we have done that. Now we got to start sending out those checks. Okay, so we're going to make quarterly payments. So I've kind of started this off for us here. First in March, after 3 months have passed, we're going to make our first estimated payment to the IRS. And we're going to figure out how do we calculate this number here? Where did we come up with $1,899? So what I did is I took, I'll show you that I took 7,596 and then I divided it by 4. We have 4 payments every 3 months, and so we took the total divided by 4, and that's how much we're going to make payments for. And of course, as the year goes, we might see the numbers change. We can always update our forecasted income statement, and we might change how much we pay. But we're going to keep things simple. And so we owe $1,899 every quarter. So we got to make that first payment. So on March 1st, we're making a payment. So our cash in bank is decreasing. Let's go ahead and put that over here for, what was it, 1,899. So we are losing 1,899 in cash, but we are getting rid of that liability, 1,899. Now this does not come off the expense. The expense still counts. At the end of the year, we should be able to see all of our expenses in an expense account. And then we cancel it out by doing some accounting end of year stuff. But for now, this is coming off a liability. We don't owe that 1,899 anymore. All right, so that was the debit. So we're going to do federal corporate income tax payable, and the credit, the debit was 1,899. Okay, and 1, 2, 3, 4, our cash in bank is decreasing by 1,899. And then we need to know the check number to reference. So that was number 412. 1, 2, 3, 4, 1, 2, 3, 4. Check number 412. Okay, so we have a little bit less owed in our liabilities account. Sweet. Then we got to do this a few more times. So I'm going to do this pretty quickly. You can watch along, and I'll kind of talk through as I do it, but we're going to do the same thing 4 times. Okay, so we did March 1st. We got June 1st, doing the same thing. So I'm going to copy and paste this. So June 1st, we are taking away some of our liability. We're also spending some money out of our bank. And this check number is not the same. It's 413. Okay, let's do it again. This time it was in September. And it was number 414. And we have less liability and less cash. And then we do it one more time. Whoops, misspelled this. Weird. There. One more time. Oops. And this would be for November, December 1st. And that was check number 415. And we're going to account for it one more time in our liabilities, one more time with our cash in bank. Okay, so we've lost all the 7,596. We got rid of that from the cash. We spent cash on it. We've gotten rid of our liabilities though, because our liability is now at 0. In fact, I'm going to go ahead and make this balance. So balance as of December 1st is 0. Okay, so everything's marked out. Everything's clear by December 1st. We still have the expense. It stays on the books. Okay. All right. And then the last thing we need to do is at the end of the year, on December 31st, we need to compare. Did we make more money or less money? Because now we'll owe more taxes or less taxes. Right, so that's when we use the actual. So expected was an estimate for the checks. The actual is now our comparison amounts. So we're going to compare, did we make more or less? Do we owe more taxes? And you can see here we actually owed a few more in taxes. In fact, let's go ahead and do a little bit of math here. I'll actually do it on a calculator instead. I don't want to mess up my sheet. 7829 minus 7596. So we actually owe $233 more than we paid this year. So let's go back to the first tab. Okay, on December 31st, we owe $233. So what that means is our again, our income tax expense, the contra account, goes up another $233. Okay, let's go ahead and balance that. At the end of the year, we want to add this up. Sweet. So 7829 should match. Yep, 7829 taxes. Cool. That's balanced. And we also, besides this debit here of 233, we need to include another new liability of 233, which we will make payments on next year. So that payable account continues on to the next year, that amount. So we owe another 233, and this is balanced. 233 here, 233 here. We have not yet paid for it, so our cash and bank does not change. So let's do it. So our debit was the federal corporate, income, tax expense. If I could type 233, and that was going to our income tax payable. Awesome. 233. And we do have a memo this time. If you look over to the far right, here's our memo number 812 that tells that we did not pay enough in taxes, that we owe a little bit more. Sweet. So, memo number 812. Cool. Memo number 812. And that's it, guys. That is the full year of accounting for tax payments. If you have any questions, let me know. If you want to see it again, just watch it again. If that still doesn't work, then just let me know, and we can go over any single one of these lines and talk about it. If you find it a mistake I made or something, just let me know. But if you're ready to go, then move on to the independent practice, and I'll talk to you next time.